It's a beautiful day in the neighborhood. A beautiful day in the neighborhood. Could you be mine? Would you be mine? My neighbor. Y'all, oh, I want to say my trader. Would you be mine? Could you be mine? My trader. Okay, look, check this out, y'all. Check this out. Check this out. We bully. You understand? This is video number 11 of me looking for the 2022 YouTube model during the New York session. And I'm going to walk through this for my journal. I do not walk through the actual model itself. If you want to learn about the 2022 YouTube model, you can look at ICT's mentorship for 2022, and it's linked in my description below. I love, love, love this day. And I'm just going to walk through it. So I would like to say that I knew that we would be bullish today based on time and price. And I'm looking for the 2022 YouTube model in this gray box right here. So for the purposes of this chart, I had this 4-hour BPR right here where we toyed around in and eventually found support. And then we had this 4-hour fair value gap. And then we are headed up. I would say this is our draw on liquidity. And maybe we can meet some resistance here because we have lower RTH gap. And this line right here is a daily fair value gap. So we can go there and reject off of there, and we know right around in there is a order block, even if you use this one, the higher one. So that's what I see on the higher time frame. I would have started out bullish on the day. I would only be looking for longs on this day. Even though there are pullbacks where you can take a short scalp, you would just have to understand that you're just taking a short scalp. So this is in the wrong place. This should go right there. Okay. All right, so this blue line right here is 50% of the previous day's range. We opened right here, so we couldn't even, once we open, get down to 50%. A lot of times it'll seek equilibrium of a previous day. That could be your indication right there that, okay. So looking at, I would like to say that right here, we were confirmed with a bullish order block. Let's just mark this right here. Let me see if I do something like no background and a black here. So when we go into the lower time frame, we're going to know we're operating inside of a bullish order block. And notice how it hit 50% right there. So let's go into our lower time frames to see if we see the 2022 YouTube model. Now, technically, this is the model before us, and this fair value gap would be the fair value gap that I would use. But I would be like, that's too much risk, because technically, let's say I got in at 50% of the fair value gap and I got in and I need to put my stop right there. I can't risk that much money. So maybe I would look at the unicorn model and get in here, lessen my risk. Still don't want to risk that kind of money. So then I got to drop my contracts down. And I really just only want to risk $500. So that's all I'm going to do is risk my $500. I understand my stop is not in the right place. And, that's the risk that I'm willing to take. So, technically, one thing I did want to look at is, did price come down into a discount? And it came right to a discount. 50%. So I could even do something like that, be like, okay, I see the model, but I only want to buy in a discount. And our unicorn model is pretty much right at a discount. So I would be comfortable putting my entry there. And then, so that's on the 5-minute chart. I didn't really see anything. Let me take this off since we know price dipped into a discount. Oh, that's a fair value gap. Let me do this. Basic fair value gap. Okay. So, that is beautiful right there. That works out well. Working my way down to the lower time frames. I'm not gonna lie, I would have been a little iffy shaky. But another thing that I could do actually is, since 6 p.m. is a draw and it's in confluence with that unicorn and all of that, then I can even actually place my entry right there, and then put this here. So of course, this is all hindsight. But I have so many confluences with the hourly mean threshold, the unicorn model, retrace to equilibrium, that I could really seriously look at taking that trade on the 5-minute chart. So here, I don't see anything other than this right here on the 3-minute, and I would have liked this even more because we are below 6 p.m. But the problem is that we have a fair value gap right here and it didn't come to it. So I wouldn't have caught it there. And going down to the 1-minute chart, I do not see it there. I would really maybe see, this is getting a little funky here because I don't want to like force trades that I would see in hindsight that, think that I would really take it if it was live. So right here, we do have a fair value gap. We have the market structure shift. We do have displacement. So if I was super bullish, and I believe that I would have been on the day regardless, I can get in on that fair value gap, and seeing the 3 drives pattern would have me feel even more comfortable with that 3 drives pattern. Boom, boom, boom. So I would be good with that. Knowing that we had a 3 drives pattern, I would be good with that. So what's more beautiful is that on a 30-second chart, this is a perfect entry right here. Straight up 2022 YouTube model. Boom. So let's say I got in there, and this is inside my trading window, so it's not out of the realm of possibility. I put my stop loss there. Let's see, I was like, I'll get in at 50%. So that would have worked. But let's be like, I don't want to get left. So I'm gonna get in on the edge. Let's just do that. So I'm risking $355. I'm bullish on the day. And let's just see, so far, the day is not over, what we'd be looking like. So I would say that, like, if I was in the trade and it was before news, I would like to think at the very least, I would take put my stop right here. Of course, we want to allow for that retracement. It came down to equilibrium. It came down to 6 p.m. I'm digging that. That is our 5-minute entry if I didn't get in down here. And then we get to be in on the news. And let's just see. Ooh, my battery is dying. I knew that was going to happen before I started the car. Okay. So let's just see, like, all right, what if you did get in down there and you were managing your stop, trailing your stop manually? I think on a day like today, based on time and price, I would be working overtime today because I know that we are in an expansion. So I want to be in on that. So Uh, my take so far right now on the day, I would be up, $8,000, as high as about $9,000, you know. So that's a beautiful day. Um, and there was on our live call today. Oh, one of the things I want to say is when I'm really confident that we're going to be bullish, and my entry is on point, then that's when I can consider adding leverage. And, you know, I just got to be really confident, because yeah, I don't want to risk, $710. In this case, even if I did, let me see. Yeah. Yeah, see, I'm being too creative. I wanted to try to avoid that because that's when you can get into trouble and you're not really, like, what are your rules? Like, if you're getting all loosey goosey, like, do you really have rules? So say I did, $500, two contracts, primo entry. This is even a BPR right here. So that's like gold right there. That's wonderful. So risk my fit, and then I'm up, dang, $20,000 day. Like, what are you talking about? So it's like when we understand how to read price action, these are the kinds of days that we are walking into effortlessly because we're not chasing price, we're not acting stupid. You know what I mean? Like, come on, come on, come on, come on, come on, come on, come on. This is possible for everybody. I encourage everybody to be a futures trader. Um, so there's that. And then when we were on the call, we were looking at this 15-minute fair value gap right here. So like if you this is out, oh, this is still in my trading window. So boom, there you go. So you have an entry into the 15-minute fair value gap to where you could pyramid on, and then up in here there was a setup for the 2022 model. What time frame were we on? Was it on the 1 minute? And this is still inside my trading window. So if I got up late or whatevs, I thought we saw a setup. It didn't come back here. There was one on the 5 minute. I know there was one on the 5 minute. Shoot, where was it? I have this little box in here, so it's leading me to believe it's in there, but this is one of those times where when you're in an expansion day, it's like get in on an order block, you know what I mean? But you just have to have confidence that we're on an expansion day. I don't know where I saw that. It could have been this there, since this is all balanced here. Oh, we got this in balance here. Then you got this one right here. So I could have like looked at that as a retracement down, for an OTE. So even if I didn't, get in on the edge of this fair value gap, I would be like, okay, boom, OTE. And that is an entry there, right there, that qualifies for the YouTube model as well. It's not as clean as that 30-second chart down here, but it is what it is. So that's great. So, there were couple of couple of entries before the news, if taken with great confidence in the analysis. I'm trusting time and price. Note my time and price study for my notes. And that's it. That's it. That's all. Goodbye. Good night. Have a nice day. All right. So that's all I got for today. And at this point, we are the draw on liquid. Look, that's all I got. And then I keep on talking. Our draw on liquidity at this point is this swing up here. And then do we have news tomorrow to take us into that Friday? No big red folder news. So I was looking to see if we had news because we have RTH gap right here that it could be working on filling too. So, but right now I'll be like, this is the draw. That or this rejection block. Boom. Let's see if I took it to the rejection block. If I was in, boom, ATK. Bye. Good night. I'm taking off the rest of the month. I don't even care. I'll wait for the next expansion day and do rinse and repeat. All right, good job, Jamie. Keep up the good work. Love you so much and have a nice day. Bye.